So, welcome back to Forex Pros. Today, we will be discussing the market of gold and see what kind of trading opportunities can we find in the upcoming week. So, as usual, we will be doing multi-time frame analysis in which we will start from the monthly time frame, moving down to weekly, then daily, and see what are the trading opportunities and where could we buy or sell depending on the condition of the market. So first of all, starting from the monthly time frame, what we can see is that the very important point which everyone is talking about right now is that on the monthly time frame, the market has reached upon the point the third time in the whole lifespan of gold is the very important structure resistance of 2000 to 2074. And now, as you can see, first time market tested and it went down all the way to 1680. Next time it went down all the way to 1620, and third time again it's testing, and we can expect a huge rejection. But there are some things, there are some points that we need to consider. Okay, so on the monthly time frame, what we can see is that is a clear cut picture that market has tested the very strong structure resistance, and now we can expect a retracement, a correction, a move towards the downside. Moving down to the weekly time frame, what we can see is that a very important point we have discussed multiple patterns, and one of the important patterns is that whenever the market makes an M pattern, we can expect a bottom neckline retracement, and after that, the continuation of the downside. This is not a fixed rule, it's something that has happened over multiple times, and this gives an idea that what we can expect. We can not only rely on this factor to put our trades. So on the weekly time frame, first of all, what we can see is that market made this M pattern with an overextended arm, and it made gave us a retracement to the bottom neckline. And now for the next week, before moving on to the next week, another important thing which we need to see is that market was making a parallel channel, a trading channel at this point, and the market has right now broken this channel, and it has also made a retest to the bottom neckline. So these are the two patterns after which we can expect the continuation of the market towards the downside. And another thing, the market left this 1860 gap, so we can expect that the market might come down to cover this gap. So on the weekly time frame, we're expecting uh, sell in the upcoming time, but this weekly closing has made a bit confusion. Why? Because we have discussed, and when the market makes a candle like this, in which the body is in which the tail is greater than the body, in the next candle, the market most probably tries to uh, complete this tail. So from on the next week, we can again expect uh, the market to continue make a move and try to reach 1980 to 1990 before coming down. So this is a small risk which we need to consider. Moving down on the daily time frame. Okay, let me get rid of this. Okay, on the daily time frame, the let me first show you a bigger picture. The main area, the whole area which is creating the problem right now is this area. Why? Because one of the things which I do while analyzing the market is that I go for a smaller picture and see with a basic eye, without any analysis, without any support resistance, and see what a person with zero knowledge would expect, and then go use my knowledge to further analyze the market. So first of all, if you give you this a basic eye, you can see that market is making a fuss at this point, and what we're expecting, market tried to break above the structure resistance, but with a fail it has come down now again back. And you can also expect a head and shoulder kind of pattern. This could be the one shoulder, this could be the head, and this could be the second shoulder, and we can move expect a move towards the downside, because there's no fixed rule that if the market is making a head and shoulder pattern, it should be one strict pointing out candle making a shoulder, one strict candle pointing out making a head, and further on. So it could be any kind of candle. So right now we can expect this with a basic eye without using our knowledge. Now, if we want to use our knowledge and analyze the market more deeply, what we can see is that uh, let me remove this. Yes. Okay, so what we can see is that right now, if we focus on the current area, because the important structure resistance or support which we need to consider, like this, these are the structure support, these are the structure resistance, they are important, but the one that is the most nearest one is the most important one because it has more chances that the market will be respecting that. Hope you got the point. Okay, now on the daily time frame, first of all, we'll see that the market broke below the structure support, and as you can see, market broke. It made a retest, then came down, again went up. Now it's going for downward movement. And if on Monday the market continues its movement towards the upside, then we all know it's making a inverse head and shoulder. What is an inverse head and shoulder? Like I discussed, this is the head and shoulder pattern. If you like mirror it, you'll see that it will be an inverse head and shoulder pattern. And in a normal pattern, we're expecting the market to go downwards, and this pattern will expect the market to go upward. Now, recalling upon the monthly and weekly time frames, we can see and we are expecting that the market might come down, but on the weekly time frame, like we discussed, the candle which the market made is through that candle, we can expect that the market might go up a bit. Just a moment. Market might go up a bit to cover the tail of this candle before coming down. So on the daily time frame, we can see that the market made a very strong rejection from the 1932 support area. So basically, we're stuck in between this zone, and we can expect the market to again get a rejection and continue this trend unless until we get something exciting to either for the market to break above or below the structure support and resistance area. Now, if we go with prediction, we can make us put a sell, and we can expect the market might go down. Yes, these are the chances. There are much chances of this happening, but I would recommend trading reactively and not predictively. Means like if the market breaks the structure support and on the retest, you can take a sell entry. Similarly, if the market for some reason gets a rejection, breaks above the structure resistance on the retest, take an entry. So this is the safest way. So now, on the daily time frame, what we can see is that the market is currently stuck in between this zone. So what we'll do, we'll study the market on the 4-hour time frame. I'll be giving signals in my Telegram channel. The link is in the description. You can join that to get free signals and analysis to help you get better with trading. So don't forget to join the Telegram channel. So we will study the market at this point, and if the market shows us that it's getting a rejection, we'll definitely buy market from 1948 to 1932 area to 1977 or 1980. Similarly, if we see that the market breaks below the structure support, then we'll be waiting for the market to provide us a retest so that we can take a sell entry. And without TP or long-term TP would be 1820, but we can get out at 1860 because that's the gap we're expecting for the market to fill. If you liked our analysis, do like and share the video and tell us in the comment section which pair or video, which pair or topic would you like us to cover in the next video. Thank you.